Okay, guys, so we're going to do our quick recap today. We traded two stocks, REKR and PED. So we'll go over REKR. So this stock was very similar to what happened yesterday on JAN. We had a halt going up around at the 45 mark, 8:45. So it squeezed up, halted, and it resumed higher, and it offered several opportunities. So on this one, it resumed at 8, it halted at 8:51. I'm sorry, around 8:51 it halted. It halted at 8:51, and let's see, we'll jump into the 1 minute chart. Oh, what is this stuff? 5 minute. Okay. 1 minute, 5 minute. Okay, so this is what the 5 minute chart looked like. This is what the 1 minute chart looks like. So we'll jump into the 1 minute so we can look at it in more detail. Let me bring this over here. Okay, so this is what it looked like. From 525 up to a high of 592, halted for a long time. This was a pretty long halt. It halted for 15 minutes. 20 minutes. It was kind of interesting because on the level 2 we could see that it obviously halted at 592, but we could also see on the bid and ask up around $10, $15. So that to me shows that there's a potential for it to open up that high, which that would have been very impressive, and it most likely would have introduced a whole new round of momentum, but it did not. That was not the case. It did open up pretty much high, I mean $1 higher, but it did not hold that level. So it resumed at $7 at the very high, $7. It found resistance up here, and then it pulled back quite a bit, pulled back down to around 650, and I jumped in there for the $half entry support, and then for a bounce up to 680. So from 650 up to 680, nice little bounce there. And then this one did come all the way down to 629, but I was looking at the $half support, and that's where I got in. And then so I was still kind of watching this. I'm like, well, this thing, it definitely is volatile, so that's what I like to trade. So I got in again for, actually, on this trade, on the second one, it had dropped. It had came down to 640. Yeah, 640, and I saw bid support. There was a big bid at 640. I think it was like 25,000 shares. So I tried to get filled at 640 on that bid support. I ended up getting filled pretty high at 649. 10 cents higher than what I wanted, 19 cents. 9 or 10 cents higher, and it popped up to 660, and I just took my profit there because I wanted to be in around 640 for a move up to 660, 670. 20-25 cent move. I only captured 10 cents, a part of that move, and it just happens. So that's a good thing. I mean, I saw that there was bid support, and so did other people, and they jumped in and they bought the stock up, which that's good. That means that I'm seeing what other people are seeing. And that's basically what the whole, what everybody's goal is, to kind of see the same thing. And so that's what gets bought up, and that's what causes those clean moves, obviously. So PED was the other stock that was traded today. This one was on the gap, on the morning gapper, but I was not interested in it because, I mean, as you can see here, it went from 80 cents up to $1.80, pulled back, and it was just chopping around here, nothing very clean. And so I wasn't even watching it. And boom, out of the gates, it just exploded. I mean, it exploded hard. It went all the way up to, from 150 up to $2. It almost halted. It didn't halt. This offered a few opportunities here, but I did not want to get in because it was just, this big move was just in this one candle. And of course, if you jump in here around 180, you got potential for it to drop back down to 140, 150, for a possible profit target of, 20 cents, the whole dollar. So you get in at 80, your profit target is $2, 20 cents, or you could come down to 40, which is 40 cents. So the profit to loss ratio is not there. It's a 2-to-1 profit to loss ratio, or 1-to-2 profit to loss ratio, and it's just not to me. I just didn't want to get in. So it's pretty interesting the way I traded today on this one. Yeah, this one did have some opportunity for dip buys here. Like for example, came up to 2, and then on this next candle it opened around 180. You could have got in there for a squeeze up to 210. A break of 2, squeeze up to 210. That would have been nice. But I remember what this one guy had commented on one of the posts, and it kind of did make me think. He said that some of my entries didn't make sense, which I tried to get in his position, and I could see why he would say that, because, like for example, this one makes sense. I'll go over this one. Uh, I'll go over this one so we can see the difference from this kind of trade, and the other trades that I've been taking. The ones that really don't make sense on the chart, but on the level 2, which is what I really use a lot to determine my entries, you'll be able to see the difference. So anyways, on this one, this was clearly a little small bull flag here, a break of the 188, this highs. So it pops up, pulls back, break of 188 for a squeeze up to 210. I jumped in here right under 190 and sold up here around 2. It did keep going, but I got out on that break of 2. It did keep going higher, and then here it hit a high of 216, and it just pulled back, broke $2. It did close above $2, so that definitely shows strength. That shows that there's a potential for it to go back up to its highs, which is not that far from there. So from 2 possibly up to 215, and that's what happened. It went back up to 215, 216. So here it's kind of consolidating around that level, just chopping around here. I got in so since I saw that $2 was a clear support level, I jumped in on this dip, down to $2. That's one of the trades that the guy was talking about that don't make sense, which, yeah, of course, here on the chart, you look at it and it doesn't make a lot of sense. Why would you buy down at this level whenever that's clearly showing weakness? Compared to here, this is just straight up strength. You buy here at this high, which is 188, and boom, for a move higher up to 210. So that definitely shows that that's two different strategies of trading. So I'll kind of break it down to see, so you can understand why I take the ones that I take at the times that I take it. So for example, here, if I jump in here, this is clearly a bull flag here. You jump in at 190. Your potential is that it goes down to the low of this candle, 176. So this is what you're risking. You're risking for it to come all the way back down here to the support level if you jump in here. Compared to if I jump in down here, I'm already buying that support. Support is 202, and I jump in right at $2. So immediately, if it doesn't break out, I already know that I got in at the wrong spot, and I don't have to hold it any longer. I just boom. If it breaks 2, I'm out. If it doesn't break out at the point where I thought it was gonna break out for a move higher, I just get out of the trade and I'm done. 2-cent loss compared to you got 15-cent loss. So it's like Ross says, to each their own. You have a 2-cent loss or a 15-cent loss. Which trade are you going to take? What are you going to take, the riskier trade or the safer trade? Well, in this case, I took the safer trade because I knew that there was support down here at $2, at the $2 mark. So I'm not sure how this music is going to come out real loud on the recording. So I'll go ahead and pause it. So that's why some of these trades, they don't make sense on the chart. Basically, they kind of do. You're buying low, selling high. That's really the ultimate goal. You buy low, low, sell high. Well, in this case, you buy high, sell higher. This case right here, you buy low, sell high. So it's just a different trading strategy. It doesn't necessarily mean it doesn't make sense. It's just a different trading strategy. And Of course, what you see on the level 2 might be a little bit different than what you see on the chart. So my little boy's crying. So that was it for today. Pretty solid day. Had some pretty nice sized winners, and pretty happy with that. So something we'll keep an eye out for is, I'm not really going to say gap and go setups because this wasn't a gap and go setup. This was not one that we were watching, so we can't really watch those. I mean, if they pop up, yeah, we'll watch them, but for right now, it's not something really obvious. We did have that REKR trade, but again, this one wasn't very clean either. But this was a halt at the 51 mark on the day, on the morning at 8:51. That's when it halted. So that's maybe something we can keep an eye out for stocks that are halting, making moves after around 8:45 up to about 9 o'clock in the morning. So that's pretty much it for today.